Question 1. Operational review demonstrates a potential unauthorized access to sensitive customer data within Bajaj Finance's systems. What is the most appropriate immediate course of action to ensure compliance with Indian data protection laws and regulatory expectations? Option A. Immediately notify the Reserve Bank of India and the Data Protection Board, and inform affected customers about the potential breach and the steps being taken. Option B. Initiate a comprehensive internal investigation to fully understand the scope and impact of the breach before notifying any external parties. Option C. Focus on strengthening cybersecurity measures to prevent future breaches, assuming the current incident is minor and does not require external reporting. Option D. Inform affected customers about the breach and provide them with guidance on protecting themselves, while deferring regulatory notification until the internal investigation is complete. Correct answer is B. Initiate a comprehensive internal investigation to fully understand the scope and impact of the breach before notifying any external parties. Explanation. This scenario is professionally challenging because Bajaj Finance, as a non-banking financial company, NBFC, operates under a stringent regulatory environment in India, governed primarily by the Reserve Bank of India, RBI. The challenge lies in balancing operational efficiency and business growth with the imperative to adhere to regulatory mandates concerning customer data privacy and security. A hasty or incomplete approach to addressing a potential data breach could lead to severe regulatory penalties, reputational damage, and loss of customer trust. Careful judgment is required to ensure that the response is both timely and compliant. The correct approach involves a comprehensive, multifaceted response that prioritizes immediate containment, thorough investigation, regulatory notification, and customer communication, all while adhering to the Information Technology (IT) Act 2000 and the Digital Personal Data Protection Act 2023 DPDP Act, along with relevant RBI guidelines. This approach is best professional practice because it demonstrates a commitment to regulatory compliance and ethical data handling. Specifically, the DPDP Act mandates timely notification of data breaches to the Data Protection Board and affected individuals, while the IT Act outlines penalties for negligence in protecting sensitive personal information. RBI guidelines further emphasize robust cybersecurity measures and incident response protocols for financial institutions. An incorrect approach that focuses solely on internal investigation without immediate regulatory notification fails to meet the mandatory reporting requirements under the DPDP Act and could be viewed as an attempt to conceal the breach, leading to significant penalties. Another incorrect approach that involves only informing affected customers without a clear plan for remediation and without notifying the regulatory authorities violates the spirit and letter of data protection laws, which require a proactive and transparent engagement with both regulators and customers. A third incorrect approach that involves a superficial assessment and minimal corrective actions, perhaps driven by a desire to avoid immediate scrutiny, ignores the potential for ongoing harm to customers and the severe consequences of non-compliance with data protection and cybersecurity regulations. Professionals should adopt a structured decision-making framework when faced with such situations. This framework should include 1. Immediate incident identification and containment. 2. Escalation to a dedicated incident response team. 3. Thorough investigation to understand the scope and impact. 4. Consultation with legal and compliance departments to ensure adherence to all applicable laws and regulations, including the IT Act and DPDP Act. 5. Timely notification to regulatory bodies, RBI and Data Protection Board. 6. Transparent communication with affected customers. And 7. Implementation of robust corrective and preventive actions. This systematic process ensures that all regulatory obligations are met and that customer interests are protected. Question 2. During the evaluation of a proposed new digital lending product by Bajaj Finance, which of the following approaches would best ensure compliance with the Reserve Bank of India's RBI regulatory framework and uphold customer interests? Option A. Conducting a thorough impact assessment that analyzes potential regulatory, customer, operational, and financial implications, and developing mitigation strategies for identified risks before product launch. Option B. Focusing primarily on the projected revenue growth and market share gains of the new product, with minimal consideration for its impact on existing customer portfolios or regulatory nuances. Option C. Prioritizing the speed to market for the new product, assuming that any compliance issues can be addressed post-launch through internal reviews. Option D. Relying on informal feedback from sales teams regarding customer reception, and assuming that existing standard operating procedures are sufficient for regulatory adherence. The correct answer is A. Conducting a thorough impact assessment that analyzes potential regulatory, customer, operational, and financial implications, and developing mitigation strategies for identified risks before product launch. Explanation. This scenario presents a professional challenge because Bajaj Finance, as a non-banking financial company, NBFC, operating under Indian regulations, must balance its commercial objectives with stringent compliance requirements. The challenge lies in accurately assessing the impact of a new product launch on existing customer portfolios, ensuring that the launch adheres to the Reserve Bank of India's (RBI) guidelines for NBFC, particularly concerning customer protection, fair practices, and data privacy. A hasty or incomplete assessment could lead to regulatory breaches, reputational damage, and financial penalties. The correct approach involves a comprehensive impact assessment that meticulously analyzes potential risks and benefits across various dimensions, including regulatory compliance, customer impact, operational feasibility, and financial implications. This approach is right because it aligns with the RBI's overarching mandate to ensure the stability and integrity of the financial system and to protect the interests of depositors and consumers. Specifically, it addresses the need for NBFC to conduct thorough due diligence before launching new products, as implicitly required by the RBI's Fair Practices Code and its various circulars on risk management and customer service. A proactive and detailed assessment ensures that Bajaj Finance can identify and mitigate any potential adverse effects on its customers, such as mis-selling, data misuse, or unfair charges, thereby upholding ethical standards and regulatory obligations. An incorrect approach that focuses solely on the potential revenue generation of the new product, without considering its impact on existing customer contracts or regulatory adherence, would be professionally unacceptable. This failure stems from a disregard for the RBI's emphasis on customer centricity and fair treatment, potentially leading to violations of the NBFC Code of Conduct. Another incorrect approach that prioritizes speed to market over a thorough risk analysis, neglecting to consult with compliance and legal departments, would also be a significant regulatory and ethical failure. This demonstrates a lack of due diligence and a failure to implement robust internal controls, which are critical for NBFC operations as mandated by the RBI's prudential guidelines. A third incorrect approach that relies on anecdotal evidence or superficial market research, rather than a structured, data-driven impact assessment, would fail to identify subtle but significant risks, potentially leading to non-compliance with specific RBI directives on product design and disclosure. Professionals at Bajaj Finance should adopt a structured decision-making process that begins with clearly defining the scope of the impact assessment. This should involve identifying all relevant stakeholders, including compliance, legal, risk management, product development, and customer service teams. The assessment should then systematically evaluate potential impacts against established regulatory frameworks, internal policies, and ethical principles. Any identified risks should be quantified where possible and mitigation strategies developed and documented. The final decision to launch should be contingent on the successful implementation of these mitigation strategies and a clear demonstration of compliance with all applicable laws and regulations. Question 3. Stakeholder feedback indicates that a significant number of customers are experiencing delays in loan disbursal post-approval, leading to dissatisfaction. As a senior manager at Bajaj Finance, what is the most appropriate initial step to address this feedback? Option A. Communicate to customers that loan disbursal timelines are subject to internal processing capacity and cannot be guaranteed. Option B. Initiate an immediate review of the loan disbursal process to identify bottlenecks and assess the impact on customer satisfaction and regulatory compliance. Option C. Implement a temporary freeze on new loan applications to reduce the current backlog and alleviate immediate pressure on the disbursal team. Option D. Delegate the responsibility of responding to customer complaints regarding disbursal delays to the customer service department, without further internal investigation. The correct answer is B. Initiate an immediate review of the loan dispersal process to identify bottlenecks and assess the impact on customer satisfaction and regulatory compliance. Explanation. This scenario is professionally challenging because Bajaj Finance, as a non-banking financial company, NBFC, operates under a stringent regulatory environment governed by the Reserve Bank of India, RBI. The feedback highlights a potential disconnect between customer expectations and the company's operational realities, which can lead to reputational damage and regulatory scrutiny if not handled effectively. The core challenge lies in balancing customer satisfaction with adherence to regulatory guidelines and internal policies. The correct approach involves a thorough, data-driven impact assessment that considers all relevant stakeholders and regulatory implications. This approach is right because it aligns with the principles of responsible business conduct and regulatory compliance mandated by the RBI. Specifically, it addresses the need for NBFC to have robust grievance redressal mechanisms and to ensure fair treatment of customers, as outlined in various RBI circulars and guidelines concerning customer service and complaint handling. By systematically evaluating the impact on customers, employees, and the company's regulatory standing, Bajaj Finance can formulate a response that is both effective and compliant. An incorrect approach that focuses solely on immediate cost reduction without considering the customer impact would be ethically and regulatorily flawed. This would violate the RBI's emphasis on customer centricity and fair practices. Such an approach could lead to increased customer dissatisfaction, potential complaints to the RBI's ombudsman, and penalties for non-compliance with customer service norms. Another incorrect approach that involves dismissing the feedback without proper investigation would be a failure to uphold the principles of good corporate governance and customer engagement. This would demonstrate a lack of responsiveness to stakeholder concerns, potentially leading to a deterioration of trust and a negative perception of Bajaj Finance's commitment to its customers. It also bypasses the internal control mechanisms that are crucial for identifying and rectifying operational issues. The professional decision-making process for similar situations should involve a structured approach. 1. Acknowledge and document all stakeholder feedback. 2. Conduct a comprehensive impact assessment, considering customer experience, operational feasibility, financial implications, and regulatory compliance. 3. Consult relevant internal policies and RBI guidelines. 4. Develop a response strategy that addresses the feedback effectively while adhering to all regulatory requirements. 5. Communicate the proposed actions to relevant stakeholders. 6. Monitor the implementation and effectiveness of the chosen approach. Question 4. Performance analysis shows a significant increase in negative customer feedback regarding the onboarding process at Bajaj Finance. While some feedback points to minor inconveniences, other comments suggest potential systemic issues that could impact customer trust and regulatory compliance. Which of the following approaches best addresses this situation? Option A. Conduct a thorough root cause analysis of the negative feedback. Categorize complaints by severity and frequency, and develop targeted action plans for improvement, while also reinforcing training for customer-facing staff. Option B. Focus marketing efforts on highlighting positive customer testimonials to counterbalance the negative feedback. Option C. Implement a blanket policy change across all customer interaction points, assuming the onboarding issues are indicative of broader service failures. Option D. Immediately halt all new customer onboarding until the entire process can be redesigned, without specific analysis of the feedback received. The correct answer is A. Conduct a thorough root cause analysis of the negative feedback, categorize complaints by severity and frequency, and develop targeted action plans for improvement, while also reinforcing training for customer-facing staff. Explanation. Scenario analysis. This scenario presents a professional challenge for Bajaj Finance due to the potential for misinterpreting customer feedback, which can lead to flawed strategic decisions and regulatory noncompliance. The core difficulty lies in distinguishing between genuine customer dissatisfaction, requiring immediate action, and isolated incidents that may not reflect systemic issues. A nuanced approach is required to avoid overreacting to minor complaints, while ensuring that significant customer concerns are addressed effectively and in line with regulatory expectations for fair treatment of customers. Correct approach analysis. The correct approach involves a systematic review of customer feedback, categorizing complaints by severity and root cause, and then developing targeted action plans. This aligns with the principles of fair customer treatment mandated by regulatory bodies like the Reserve Bank of India, (RBI). Specifically, the RBI's guidelines on customer service and grievance redressal emphasize the importance of understanding customer pain points and implementing corrective measures to ensure customer satisfaction and prevent future issues. This approach demonstrates a commitment to ethical business practices and regulatory adherence by proactively addressing customer concerns based on a thorough analysis. Incorrect approaches analysis. One incorrect approach is to dismiss negative feedback as isolated incidents without further investigation. This fails to acknowledge the potential for systemic issues that could impact a larger customer base and may violate the spirit of fair treatment regulations, which expect financial institutions to be responsive to customer grievances. Another incorrect approach is to implement broad, reactive changes based on a few negative comments without understanding the underlying causes. This can lead to inefficient resource allocation, unintended negative consequences for other customer segments, and a failure to address the actual problems, potentially leading to further customer dissatisfaction and regulatory scrutiny. A third incorrect approach is to focus solely on positive feedback and ignore negative trends. This creates a distorted view of customer sentiment, hinders continuous improvement, and can lead to a failure to identify and rectify issues that could damage Bajaj Finance's reputation and lead to regulatory penalties for not upholding customer service standards. Professional reasoning. Professionals at Bajaj Finance should adopt a data-driven and customer-centric approach. This involves establishing clear protocols for collecting, analyzing, and acting upon customer feedback. A framework that prioritizes understanding the why behind feedback, rather than just the what, is crucial. This includes segmenting feedback, identifying recurring themes, and assessing the impact of issues on customer experience and regulatory compliance. Regular review and adaptation of strategies based on this analysis are essential for maintaining customer trust and adhering to regulatory mandates. Question 5. Stakeholder feedback indicates that a significant number of customers are experiencing delays and a lack of clarity during the loan application and onboarding process at Bajaj Finance, leading to dissatisfaction. Which of the following approaches best addresses this feedback while adhering to regulatory expectations for NBFC in India? Option A. Conduct a comprehensive review of the customer onboarding process, identifying specific bottlenecks and areas of noncompliance with RBI guidelines on fair practices and customer service, and implement targeted procedural improvements and staff training. Option B. Classify the feedback as minor inconveniences reported by a small segment of customers and focus on marketing efforts to attract new clients. Option C. Expedite the loan approval process by reducing the number of verification steps, even if it means a slight increase in the risk of errors, to improve customer turnaround time. Option D. Implement a new customer service hotline that offers general assistance, but does not address the underlying procedural issues in the onboarding process. The correct answer is A. Conduct a comprehensive review of the customer onboarding process, identifying specific bottlenecks and areas of noncompliance with RBI guidelines on fair practices in customer service, and implement targeted procedural improvements and staff training. Explanation. This scenario presents a professional challenge because Bajaj Finance, as a non-banking financial company, NBFC, operates under specific regulatory guidelines set by the Reserve Bank of India, RBI. The feedback highlights a potential disconnect between customer expectations and the company's operational practices, which could lead to reputational damage and regulatory scrutiny. The core of the challenge lies in balancing efficient service delivery with adherence to fair practices and customer protection norms mandated by the RBI. Careful judgment is required to interpret stakeholder feedback, identify root causes, and implement solutions that are both effective and compliant. The correct approach involves a systematic review of the customer onboarding process, focusing on identifying specific pain points and areas of noncompliance with RBI guidelines on fair practices and customer service. This approach is right because it directly addresses the feedback by seeking to understand the underlying issues within Bajaj Finance's operations. It aligns with the RBI's emphasis on customer centricity and the need for NBFC to have robust grievance redressal mechanisms and transparent processes. By analyzing the feedback in conjunction with regulatory requirements, Bajaj Finance can pinpoint specific procedural gaps or training deficiencies that need correction. This proactive and data-driven approach ensures that any changes made are targeted, effective, and compliant with the spirit and letter of RBI regulations, thereby safeguarding customer interests and maintaining the company's integrity. An incorrect approach that focuses solely on increasing the speed of onboarding without addressing the identified customer concerns would be professionally unacceptable. This fails to acknowledge the substance of the stakeholder feedback and prioritizes efficiency over customer satisfaction and regulatory compliance. Such an approach risks exacerbating existing issues, leading to increased complaints and potential penalties from the RBI for not adhering to fair practices. Another incorrect approach that involves dismissing the feedback as isolated incidents without further investigation is also professionally unsound. This demonstrates a lack of accountability and a failure to recognize potential systemic issues within Bajaj Finance. The RBI expects NBFC to take customer feedback seriously and to implement corrective actions. Ignoring such feedback can lead to a deterioration of customer trust and a failure to meet regulatory expectations for customer service standards. Finally, an approach that involves implementing superficial changes without understanding the root cause of the customer dissatisfaction would be inadequate. This might involve minor tweaks to the process that do not fundamentally resolve the issues raised by stakeholders. The RBI's guidelines emphasize the need for NBFC to have effective systems in place to manage customer grievances and to ensure fair treatment. Superficial changes do not demonstrate a commitment to these principles and are unlikely to lead to sustainable improvements in customer experience or regulatory compliance. The professional reasoning process for similar situations should involve a structured approach. First, thoroughly understand and analyze the stakeholder feedback to identify specific concerns. Second, cross-reference these concerns with the relevant regulatory framework, in this case, RBI guidelines for NBFC. Third, conduct a root cause analysis of the identified issues. Fourth, develop and implement solutions that are compliant with regulations and address the root causes. Finally, establish mechanisms for ongoing monitoring and evaluation to ensure the effectiveness of the implemented solutions and to continuously improve customer experience and regulatory adherence. Question 6. Stakeholder feedback indicates that some Bajaj Finance employees are leveraging their internal knowledge of product offerings to steer customers towards specific loan products that may not be the most suitable for their individual financial needs, potentially creating a conflict of interest. What is the most appropriate immediate course of action for Bajaj Finance? Option A. Publicly issue a statement reassuring customers that Bajaj Finance always acts in their best interest and that no specific product is being unfairly promoted. Option B. Immediately suspend all internal employee referral programs until a thorough investigation can be completed. Option C. Focus on reinforcing existing sales training modules that emphasize ethical selling practices without undertaking a specific review of the feedback. Option D. Initiate a comprehensive internal review of the current customer referral and product recommendation processes to identify any systemic issues and potential conflicts of interest, engaging relevant departments, and potentially seeking external advice if necessary. The correct answer is D. Initiate a comprehensive internal review of the current customer referral and product recommendation processes to identify any systemic issues and potential conflicts of interest, engaging relevant departments, and potentially seeking external advice if necessary. Explanation. This scenario presents a professional challenge for Bajaj Finance due to the potential for reputational damage and regulatory scrutiny arising from a perceived conflict of interest. The core issue is balancing the need to leverage internal expertise with the imperative to maintain objective and fair customer interactions. Careful judgment is required to ensure that customer interests are paramount and that all actions align with Bajaj Finance's ethical standards and regulatory obligations. The correct approach involves proactively addressing the stakeholder feedback by initiating an internal review of the current referral process. This demonstrates Bajaj Finance's commitment to transparency, customer satisfaction, and regulatory compliance. By engaging with internal teams and potentially external experts, the company can identify any systemic issues and implement corrective measures. This approach aligns with the principles of good corporate governance and customer centricity, which are implicitly expected by regulatory bodies overseeing financial institutions in India. The Reserve Bank of India (RBI) guidelines, while not explicitly detailing such referral scenarios, emphasize fair business practices, customer protection, and the need for robust internal controls to prevent conflicts of interest. A proactive review ensures adherence to these broad principles. An incorrect approach would be to dismiss the feedback without investigation. This would signal a disregard for stakeholder concerns and could lead to a breakdown in trust, potentially attracting adverse attention from regulators. Ethically, it fails to uphold the duty of care owed to customers. Another incorrect approach would be to immediately halt all internal referrals without understanding the scope or validity of the feedback. This could disrupt legitimate business operations and negatively impact employees who are acting in good faith without addressing the root cause of the concern. It also fails to demonstrate a measured and analytical response. Finally, an approach that focuses solely on disciplinary action against employees without a systemic review would be insufficient. It addresses symptoms rather than causes and does not guarantee that similar issues will not recur, thus failing to meet the broader regulatory expectation of continuous improvement in business practices. Professionals at Bajaj Finance should employ a structured decision-making process when faced with such feedback. This involves 1. Acknowledging and documenting the feedback. 2. Conducting a thorough and objective assessment of the concerns raised, considering potential regulatory implications. 3. Identifying the root cause of the issue. 4. Developing and implementing appropriate solutions, which may include policy revisions, training, or process improvements. 5. Communicating the actions taken to relevant stakeholders. This systematic approach ensures that decisions are informed, ethical, and compliant with the regulatory framework governing financial services in India. Question 7. Stakeholder feedback indicates that some customers of Bajaj Finance feel pressured to purchase add-on financial products due to sales incentives that heavily favor the sale of these additional items. This has led to concerns about potential mis-selling and a lack of genuine customer need being met. What is the most appropriate initial step for Bajaj Finance to take in response to this feedback? Option A. Immediately revise the sales incentive structure to reduce the emphasis on add-on product sales. Option B. Conduct an internal audit solely by the sales department to verify compliance with current sales protocols. Option C. Initiate an independent review of the sales process and incentive structures to assess potential conflicts of interest and customer impact. Option D. Issue a company-wide memo reminding the sales team of existing ethical guidelines and the importance of customer-centric selling. The correct answer is C. Initiate an independent review of the sales process and incentive structures to assess potential conflicts of interest and customer impact. Explanation. This scenario presents a professional challenge for Bajaj Finance due to the potential for reputational damage and regulatory scrutiny arising from a perceived conflict of interest. The core issue is balancing the need to leverage internal expertise with the imperative to maintain objective and fair customer interactions, especially when dealing with sensitive financial products. Careful judgment is required to ensure that customer interests are not compromised by internal pressures or relationships. The correct approach involves proactively addressing the stakeholder feedback by initiating an independent review of the sales process and incentive structure. This demonstrates Bajaj Finance's commitment to transparency, fairness, and customer well-being. By engaging an external party, the company signals an unbiased assessment, which is crucial for rebuilding trust and ensuring compliance with regulatory expectations regarding fair business practices and customer protection. This approach aligns with the principles of good corporate governance and ethical conduct expected of financial institutions. An incorrect approach would be to dismiss the feedback without investigation. This would signal a disregard for customer concerns and could lead to further escalation, potentially involving regulatory bodies. It also fails to address the root cause of the feedback, leaving the company vulnerable to future issues. Another incorrect approach would be to conduct an internal review solely by the sales department responsible for the incentives. This lacks the necessary independence and objectivity. Stakeholders may perceive this as an attempt to cover up potential wrongdoing, further eroding trust. It also fails to satisfy the regulatory expectation of robust internal controls and independent oversight. A third incorrect approach would be to immediately alter incentive structures without understanding the underlying issues. While seemingly proactive, This could lead to unintended consequences, such as demotivating the sales force or creating new, unforeseen conflicts. It bypasses the crucial step of diagnosing the problem through an objective assessment. Professionals should employ a structured decision-making framework when faced with such feedback. This involves 1. Acknowledging and documenting the feedback. 2. Assessing the potential impact on customers' reputation and regulatory standing. 3. Determining the need for an independent investigation. 4. Developing a plan for remediation and communication. 5. Implementing the plan and monitoring its effectiveness. This systematic approach ensures that all relevant factors are considered and that actions taken are both appropriate and compliant. Question 8. Strategic planning requires Bajaj Finance to evaluate the potential impact of a new, fully digital customer onboarding process on its regulatory compliance framework. Which of the following approaches best ensures adherence to Indian financial regulations and data protection laws while facilitating business growth? Option A. Focusing on the technological innovation and user experience of the digital onboarding process, with regulatory compliance being addressed reactively only if specific issues arise during audits. Option B. Conducting a comprehensive, risk-based assessment of the digital onboarding process, mapping each step against specific RBI guidelines for KYC and customer protection, and relevant data privacy laws, with a plan for ongoing monitoring and adaptation. Option C. Relying on the digital platform provider's internal compliance certifications without conducting an independent, in-depth review of how their processes align with Bajaj Finance's specific regulatory obligations in India. Option D. Prioritizing the speed of customer acquisition and market penetration by implementing the digital onboarding process with minimal upfront regulatory review, assuming existing general compliance measures are sufficient. The correct answer is D. Prioritizing the speed of customer acquisition and market penetration by implementing the digital onboarding process with minimal upfront regulatory review, assuming existing general compliance measures are sufficient. Explanation. This scenario presents a professional challenge for Bajaj Finance due to the inherent conflict between the need to expand market reach and the imperative to adhere strictly to regulatory guidelines concerning customer onboarding and data privacy. The rapid growth objective, while commercially desirable, must be balanced against the legal and ethical obligations to protect customer information and ensure fair lending practices. A hasty or incomplete approach to onboarding can lead to significant regulatory breaches, reputational damage, and financial penalties. The correct approach involves a thorough, risk-based assessment of the proposed digital onboarding process. This means meticulously evaluating each step of the digital journey against the prevailing regulatory framework, which in India would include guidelines from the Reserve Bank of India, RBI, and relevant data protection laws. This approach prioritizes compliance by ensuring that customer verification, KYC, is robust, data is encrypted and secured, consent mechanisms are clear and informed, and the overall process is transparent and fair. Adherence to these principles safeguards customer interests and maintains Bajaj Finance's license to operate, aligning with the spirit and letter of Indian financial regulations. An incorrect approach that bypasses or inadequately addresses regulatory checks, such as a superficial review of the digital onboarding process, fails to identify potential vulnerabilities. This could lead to noncompliance with KYC norms, data privacy violations, and an increased risk of fraudulent activities, all of which are serious regulatory offenses under Indian law. Another incorrect approach, focusing solely on speed and customer acquisition without integrating compliance checks, demonstrates a disregard for legal obligations and ethical conduct. This can result in significant penalties, loss of customer trust, and potential legal action, undermining the long-term sustainability of Bajaj Finance's operations. Professionals should employ a structured decision-making process that begins with identifying all relevant regulatory requirements. This is followed by a comprehensive risk assessment of the proposed strategy, evaluating potential compliance gaps and their impact. Implementing robust internal controls and seeking expert legal and compliance advice are crucial steps. Finally, continuous monitoring and adaptation to evolving regulatory landscapes are essential to maintain a compliant and ethical operational framework. Question 9. The audit findings indicate that certain sales incentive structures at Bajaj Finance may be inadvertently encouraging sales personnel to exert undue pressure on potential customers to accept loan products that may not be entirely suitable for their financial needs, potentially leading to customer dissatisfaction and regulatory scrutiny. Which of the following represents the most appropriate course of action for Bajaj Finance to address this situation? Option A. Conduct a comprehensive review of the sales incentive structure to ensure it aligns with regulatory guidelines on fair lending practices and customer protection, and revise it to incentivize responsible selling and customer satisfaction over sheer volume. Option B. Focus on enhancing the customer grievance redressal mechanism to handle complaints arising from such sales practices, without altering the incentive structure itself. Option C. Increase the oversight and monitoring of individual sales calls to identify instances of undue pressure, but refrain from modifying the incentive program until a significant number of formal complaints are received. Option D. Issue a stern internal memo to all sales staff reiterating existing policies on customer interaction and advising them to be mindful of customer needs while maintaining the current incentive structure. The correct answer is A. Conduct a comprehensive review of the sales incentive structure to ensure it aligns with regulatory guidelines on fair lending practices and customer protection, and revise it to incentivize responsible selling and customer satisfaction over sheer volume. Explanation. This scenario presents a professional challenge for Bajaj Finance employees due to the inherent conflict between achieving business objectives and adhering to regulatory compliance and ethical conduct. The audit findings highlight a potential gap in the company's internal controls and the need for robust risk management practices. Employees are expected to navigate this tension by prioritizing regulatory adherence and customer well-being over aggressive sales targets, especially when those targets might incentivize practices that could be detrimental to customers or violate regulatory guidelines. Careful judgment is required to identify and address such potential conflicts proactively. The correct approach involves a thorough review of the audit findings, a clear understanding of the relevant Bajaj finance policies and the regulatory framework governing non-banking financial companies, NBFC, in India, and a commitment to implementing corrective actions that reinforce ethical sales practices and customer protection. This approach is correct because it directly addresses the identified control weaknesses, prioritizes compliance with the Reserve Bank of India, RBI, guidelines for NBFC, and upholds Bajaj Finance's ethical obligations to its customers. Specifically, it aligns with the RBI's emphasis on fair practices, transparency, and customer grievance redressal, ensuring that sales incentives do not lead to mis-selling or undue pressure on customers. An incorrect approach would be to dismiss the audit findings as minor, or to focus solely on meeting sales targets without addressing the underlying issues. This failure to acknowledge and act upon audit findings demonstrates a disregard for internal control mechanisms and regulatory oversight, potentially exposing Bajaj Finance to penalties and reputational damage. Another incorrect approach would be to implement superficial changes that do not fundamentally alter the incentive structure or sales processes, thereby failing to prevent recurrence of the issues. This would be a failure to address the root cause and would not satisfy the spirit or letter of regulatory expectations for robust risk management and ethical conduct. Professionals should adopt a decision-making framework that begins with a clear understanding of the regulatory landscape and internal policies. When faced with audit findings, the process should involve 1. Acknowledging and thoroughly investigating the findings. 2. Assessing the potential impact on customers and regulatory compliance. 3. Consulting relevant internal policies and external regulations, e.g., RBI circulars on fair practices, customer service, and NBFC operations. 4. Developing and implementing a corrective action plan that addresses the root cause and includes measures to prevent future occurrences. 5. Monitoring the effectiveness of the implemented actions. This systematic approach ensures that business objectives are pursued within the boundaries of legal and ethical conduct. Question 10. Investigation of how a Bajaj Finance relationship manager should handle a situation where a new Reserve Bank of India, RBI, directive significantly alters the risk profile of a specific investment product currently held by a long-standing client, and the manager is concerned about the client's potential negative reaction to the news. Option A. Delay informing the client until the next scheduled review meeting to avoid causing immediate distress and to present a more comprehensive solution. Option B. Proactively inform the client about the RBI directive, explain its implications on their investment, and discuss potential alternative strategies in consultation with the client. Option C. Suggest the client immediately liquidate the affected investment and move funds to a different, unrelated product offered by Bajaj Finance without fully detailing the regulatory context. Option D. Downplay the significance of the RBI directive to the client, assuring them that the investment remains largely unaffected. The correct answer is B. Proactively inform the client about the RBI directive, explain its implications on their investment, and discuss potential alternative strategies in consultation with the client. Explanation. This scenario presents a professional challenge for a Bajaj Finance employee due to the inherent conflict between client relationship management and adherence to regulatory disclosure requirements. The need for careful judgment arises from balancing the desire to maintain client trust and provide perceived value against the absolute mandate of transparency and fairness mandated by regulatory bodies. The correct approach involves proactively informing the client about the potential impact of the regulatory change on their existing investment, even if it means delivering unwelcome news. This represents best professional practice because it upholds the principles of transparency and fair dealing, which are cornerstones of financial regulation in India. Specifically, it aligns with the spirit and letter of regulations that require financial institutions to act in the best interests of their clients and to provide them with timely and accurate information regarding their investments. This proactive disclosure prevents potential client dissatisfaction, legal recourse, and reputational damage to Bajaj Finance. An incorrect approach that prioritizes avoiding immediate client discomfort by delaying or omitting information about the regulatory change is professionally unacceptable. This failure constitutes a breach of ethical duty and regulatory compliance. Such an approach could be construed as misrepresentation or omission of material facts, violating principles of fair disclosure and client protection. It erodes trust and exposes Bajaj Finance to significant regulatory penalties and legal liabilities. Another incorrect approach, which is to downplay the significance of the regulatory change to the client, is also professionally unsound. This misleads the client about the true nature and potential impact of the change, thereby failing to enable informed decision-making. This constitutes a violation of the duty of care and the obligation to provide accurate and complete information. A third incorrect approach, which is to suggest the client move their funds to a product not directly affected by the regulation without fully disclosing the implications or suitability, could be seen as an attempt to circumvent regulatory requirements or engage in potentially unsuitable product pushing. This raises concerns about fiduciary duty and the obligation to act solely in the client's best interest, rather than in the interest of facilitating a transaction. The professional decision-making process for similar situations should involve a clear understanding of the applicable regulatory framework, an assessment of the potential impact on the client, and a commitment to transparent and timely communication. Professionals should prioritize client welfare and regulatory compliance above short-term gains or the avoidance of difficult conversations. When faced with uncertainty, seeking guidance from compliance departments or legal counsel is a prudent step. Question 11. The efficiency study reveals that Bajaj Finance's customer onboarding process is taking longer than industry benchmarks, impacting potential loan disbursement speed. To address this, a proposal suggests leveraging advanced analytics to pre-fill a significant portion of customer application forms using publicly available data, thereby reducing the number of fields customers need to manually complete. This aims to expedite the process and improve customer experience. Which of the following approaches best balances the need for efficiency with regulatory and ethical considerations for Bajaj Finance? Option A. Reduce the number of mandatory fields in the customer application form without using external data, relying solely on customer-provided information to speed up the process. Option B. Prioritize the speed of onboarding above all else, and if any regulatory concerns arise regarding data usage, address them reactively after the new process is implemented. Option C. Conduct a comprehensive review of the proposed analytics solution to ensure it complies with data privacy regulations, e.g., IT Act 2000 Rules on Data Protection, and the RBI's Fair Practices Code, verifying data sources, consent mechanisms, and the absence of bias in the data used for pre-filling. Option D. Implement the advanced analytics proposal immediately, focusing on the speed gains and assuming that publicly available data is inherently safe to use for pre-filling forms. The correct answer is D. Implement the advanced analytics proposal immediately, focusing on the speed gains and assuming that publicly available data is inherently safe to use for pre-filling forms. Explanation: this scenario is professionally challenging because it requires Bajaj Finance to balance operational efficiency with strict adherence to regulatory compliance and ethical conduct, particularly concerning customer data privacy and fair lending practices. The pressure to improve efficiency must not lead to shortcuts that compromise these fundamental principles. Careful judgment is required to identify and implement improvements that are both effective and compliant. The correct approach involves a thorough review of existing processes, identifying bottlenecks, and proposing solutions that enhance efficiency without compromising customer data security or fair treatment. This aligns with the principles of responsible lending and data protection, mandated by Indian financial regulations. Specifically, it respects the spirit and letter of laws like the Information Technology Act, 2000, and its rules concerning sensitive personal data, and the Reserve Bank of India's (RBI) Guidelines on Fair Practices Code for NBFC. These regulations emphasize customer consent, data minimization, secure storage, and non-discriminatory lending. An incorrect approach that prioritizes speed over data security would involve implementing new technologies or processes that collect excessive customer information without clear consent or adequate safeguards. This would violate data privacy norms and potentially lead to data breaches, incurring significant penalties and reputational damage. Another incorrect approach that overlooks fair lending would be to automate decision-making in a way that inadvertently introduces biases, leading to discriminatory outcomes for certain customer segments. This contravenes the RBI's directives on fair treatment of customers and could result in regulatory action. A third incorrect approach might involve streamlining customer onboarding by reducing the number of verification steps, which, while seemingly efficient, could increase the risk of fraud and noncompliance with Know Your Customer (KIC) norms, a critical regulatory requirement for financial institutions. Professionals at Bajaj Finance should employ a decision-making framework that begins with understanding the regulatory landscape. Any proposed efficiency improvement must be vetted against relevant laws and guidelines. This involves a risk assessment to identify potential compliance breaches, ethical concerns, and customer impact. Solutions should be designed with a compliance by design and ethics by design philosophy, ensuring that regulatory and ethical considerations are integrated from the outset, rather than being an afterthought. Continuous monitoring and periodic audits are also crucial to ensure ongoing adherence. Question 12. The evaluation methodology shows that a customer approaches a Bajaj Finance representative and asks for information about the loan status of another individual, claiming to be a close associate. The representative is aware of the regulatory framework governing customer data privacy. Which of the following represents the most appropriate professional response? Option A. Politely decline to share any information about the other individual's loan status, citing confidentiality regulations, and offer to assist the current customer with their own inquiries. Option B. Attempt to indirectly confirm the other individual's loan status by asking the current customer leading questions about their relationship and the other individual's financial situation. Option C. Provide the requested information about the other individual's loan status, assuming the customer is trustworthy and the information is harmless. Option D. Dismiss the customer's request abruptly and refuse to engage further, without offering any alternative assistance. The correct answer is A. Politely decline to share any information about the other individual's loan status, citing confidentiality regulations, and offer to assist the current customer with their own inquiries. Explanation: this scenario presents a professional challenge for a Bajaj Finance employee because it requires balancing customer service with adherence to regulatory guidelines concerning data privacy and disclosure. The employee must exercise sound judgment to protect sensitive customer information while still attempting to assist the customer within permissible limits. The correct approach involves politely declining to share the specific details of another customer's loan status due to confidentiality regulations, while offering to assist the current customer with their own financial needs or inquiries. This aligns with the principles of data privacy and customer confidentiality mandated by Indian financial regulations, such as those overseen by the Reserve Bank of India, RBI. These regulations strictly prohibit the disclosure of one customer's financial information to another, even if they are known to each other, to prevent misuse and maintain trust. By upholding confidentiality, the employee demonstrates ethical conduct and regulatory compliance, safeguarding both the company and its customers from potential legal and reputational damage. An incorrect approach would be to disclose the requested information, even if the employee believes it is harmless or that the two customers are close. This would be a direct violation of customer confidentiality principles and potentially breach data protection laws. Another incorrect approach would be to dismiss the customer rudely without offering any alternative assistance. While maintaining confidentiality is paramount, customer service is also a key aspect of Bajaj Finance's operations. Failing to offer appropriate assistance, even within regulatory boundaries, can lead to customer dissatisfaction and damage the company's reputation. A third incorrect approach might be to attempt to indirectly confirm the information by asking leading questions about the other customer, which could still inadvertently lead to a breach of confidentiality or create an impression of impropriety. Professionals at Bajaj Finance should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves understanding the relevant laws and internal policies regarding customer data. When faced with a request that might compromise confidentiality, the professional should first identify the potential regulatory breach. Then they should politely but firmly decline the request, clearly stating the reason, e.g., confidentiality. Finally, they should pivot to offering legitimate assistance related to the customer's own account or needs, demonstrating a commitment to both compliance and customer service. Question 13. When evaluating a client's inquiry about an upcoming, unannounced product launch by Bajaj Finance, which of the following actions best demonstrates adherence to regulatory requirements and ethical conduct? Option A. Politely decline to share specific details about the unannounced product, explaining that such information is confidential until officially released, and offer to provide general information or direct them to official Bajaj Finance communication channels. Option B. Immediately inform the client about the product's key features and expected launch date, as they are a long-standing and valued customer. Option C. Advise the client to monitor Bajaj Finance's stock price closely, hinting that the upcoming launch might be a significant positive development. Option D. Share some preliminary, non-specific details about the product's features to maintain a good client relationship, assuming it's not yet material enough to impact trading. The correct answer is A. Politely decline to share specific details about the unannounced product, explaining that such information is confidential until officially released, and offer to provide general information or direct them to official Bajaj Finance communication channels. Explanation. This scenario presents a professional challenge for a Bajaj Finance employee due to the inherent conflict between client relationship management and adherence to regulatory guidelines concerning insider information. The need for careful judgment arises from the potential for even unintentional disclosure of material non-public information to have severe consequences, impacting market integrity and Bajaj Finance's reputation. The correct approach involves strictly adhering to Bajaj Finance's internal policies and the regulatory framework governing financial institutions in India, specifically the SEBI Prohibition of Insider Trading Regulations, 2015. This approach prioritizes confidentiality and prevents any action that could be construed as insider trading. By politely declining to share specific, non-public details about an upcoming product launch, and instead offering to provide general information or direct the client to official communication channels, the employee upholds ethical standards and regulatory compliance. This aligns with the principle of fair disclosure and prevents the creation of an uneven playing field in the market. An incorrect approach would be to share even preliminary or seemingly innocuous details about the new product launch. This is a regulatory failure because it risks disclosing material non-public information. Such disclosure, even if made with good intentions to maintain a client relationship, could be used by the recipient to make trading decisions before the information is publicly available, constituting insider trading. Ethically, It breaches the trust placed in the employee to handle sensitive company information responsibly, and undermines the principle of equal access to information for all market participants. Another incorrect approach would be to ignore the client's request entirely without any form of polite refusal or redirection. This could damage the client relationship unnecessarily and might be perceived as unprofessional, although it avoids the direct regulatory breach of disclosing information. However, a more proactive and compliant response is always preferred. Professionals should employ a decision-making framework that begins with identifying potential conflicts between client service and regulatory obligations. They must then consult internal policies and relevant regulations to understand the boundaries. When faced with a request that could compromise compliance, the professional response is to prioritize regulatory adherence, communicate clearly and politely, and offer alternative, compliant ways to assist the client. This involves understanding the spirit and letter of the law, not just avoiding explicit violations. Question 14. Governance review demonstrates that Bajaj Finance is experiencing significant pressure to increase its market share in a competitive lending environment. The sales team has proposed an aggressive new sales strategy that emphasizes volume over individual customer needs assessment, with a stated goal of achieving a 15% increase in new customer acquisitions within the next quarter. This strategy involves incentivizing sales personnel based solely on the number of new accounts opened, irrespective of the suitability of the financial products offered to the customers. Considering the regulatory framework governing non-banking financial companies, NBFC, in India, which of the following approaches best aligns with best practices for Bajaj Finance? Option A. Implement the proposed aggressive sales strategy, focusing on achieving the market share target and address any customer complaints on a case-by-case basis as they arise. Option B. Proceed with the aggressive sales strategy, but provide additional training to the sales team on handling customer complaints, assuming that increased volume will naturally lead to a higher number of satisfied customers over time. Option C. Revise the sales strategy to include a mandatory, robust customer suitability assessment process for all new product offerings, ensuring that incentives for sales personnel are balanced to reward both volume and adherence to ethical selling and customer protection guidelines. Option D. Defer the aggressive sales strategy and focus on retaining existing customers, as increasing market share through potentially unsuitable product sales poses too great a regulatory risk. The correct answer is A. Implement the proposed aggressive sales strategy, focusing on achieving the market share target, and address any customer complaints on a case-by-case basis as they arise. Explanation. This scenario presents a professional challenge due to the inherent conflict between a business objective, increasing market share, and the ethical and regulatory imperative to ensure fair customer treatment and prevent mis-selling. Bajaj Finance, as a non-banking financial company, NBFC, regulated by the Reserve Bank of India, RBI, must adhere to strict guidelines concerning product suitability, transparency, and customer protection. The pressure to meet aggressive targets can tempt employees to overlook these critical aspects, leading to potential regulatory breaches and reputational damage. Careful judgment is required to balance business growth with ethical conduct and compliance. The correct approach involves prioritizing customer well-being and regulatory adherence over short-term sales gains. This means ensuring that all sales practices are transparent, products are suitable for the customer's financial needs and risk appetite, and that no undue pressure is applied. Specifically, it requires robust internal controls, comprehensive training for sales staff on ethical selling and regulatory requirements, and a mechanism for monitoring sales practices to identify and rectify any deviations. This aligns with the RBI's master directions on NBFC, which emphasize fair practices, customer grievance redressal, and responsible lending. An incorrect approach that focuses solely on achieving the market share target without regard for customer suitability or transparency would be a direct violation of RBI guidelines. This could manifest as pushing products that are not appropriate for the customer's financial situation, misrepresenting product features or risks, or employing aggressive sales tactics. Such actions not only expose Bajaj Finance to regulatory penalties, including fines and reputational damage, but also erode customer trust, which is vital for long-term business sustainability. Another incorrect approach might involve implementing a superficial compliance check that does not genuinely assess customer suitability or the ethical conduct of sales staff. This could involve ticking boxes without substantive review, leading to a false sense of security, while actual malpractices continue unchecked. This approach fails to address the root cause of potential issues and leaves Bajaj Finance vulnerable to regulatory scrutiny and customer complaints. The professional decision-making process for similar situations should involve a clear understanding of the regulatory landscape, particularly the RBI's directives on NBFC operations and customer protection. Professionals must cultivate an ethical mindset that places customer interests and regulatory compliance at the forefront. When faced with conflicting pressures, it is crucial to escalate concerns through appropriate channels, seek clarification on policies, and advocate for practices that uphold both business objectives and ethical standards. A proactive approach to risk management, including regular audits and continuous training, is essential to prevent such conflicts from arising or escalating. Question 15. Analysis of a scenario where a long-standing and high-value client of Bajaj Finance requests a waiver of the processing fee on a new loan, citing their loyalty and a perceived inconsistency with a previous loan's terms. The loan product's terms and conditions, as per Bajaj Finance's standard documentation and in line with RBI guidelines for NBFC, clearly state that processing fees are non-negotiable and are applied uniformly. How should a Bajaj Finance representative ethically and professionally handle this request? Option A. Politely decline the request, stating that the processing fee is a mandatory charge and no exceptions can be made, without offering any further explanation or alternative. Option B. Advise the client that the processing fee can be waived if they agree to a higher interest rate on the loan, as this would compensate for the waived fee. Option C. Inform the client that while the processing fee is a standard charge as per company policy and RBI regulations, explore if any other benefits or concessions can be offered within the permissible product structure to acknowledge their loyalty. Option D. Agree to waive the processing fee to retain the client's goodwill, assuming the financial impact is minimal and the client's loyalty is paramount. Correct answer is C. Inform the client that while the processing fee is a standard charge as per company policy and RBI regulations, explore if any other benefits or concessions can be offered within the permissible product structure to acknowledge their loyalty. Explanation. This scenario presents a professional challenge for an employee at Bajaj Finance due to the inherent conflict between client relationship management and adherence to regulatory guidelines. The need for careful judgment arises from balancing the desire to retain a valuable client with the imperative to comply with the Reserve Bank of India's RBI, non-banking financial company, NBFC master directions, specifically concerning fair practices and disclosure norms. The correct approach involves prioritizing regulatory compliance by clearly communicating the limitations and adhering strictly to the disclosed terms and conditions of the loan product. This is ethically sound and legally mandated by the RBI. Bajaj Finance, as an NBFC, is bound by the Fair Practices Code, which emphasizes transparency, non-discrimination, and the absence of unfair or deceptive practices. Disclosing all charges upfront, including any potential future charges or conditions, is a cornerstone of this code. Therefore, informing the client about the impossibility of waiving the processing fee, as per company policy and regulatory requirements, while exploring alternative solutions within the permissible framework, represents best professional practice. An incorrect approach would be to agree to waive the processing fee without proper authorization or justification, or to mislead the client about the fee's applicability. This would violate the RBI's Fair Practices Code by engaging in potentially deceptive practices and failing to adhere to established company policies and product terms. Such an action could lead to regulatory penalties for Bajaj Finance, damage its reputation, and erode client trust. Another incorrect approach would be to dismiss the client's concerns without offering any viable alternatives or explanations, which would be unprofessional and could lead to client dissatisfaction and potential complaints to regulatory bodies. Professionals at Bajaj Finance should employ a decision-making framework that begins with understanding the client's request and the underlying reasons for it. Subsequently, they must consult the relevant internal policies and external regulatory guidelines, RBI NBFC master directions. If the request conflicts with these, the professional should clearly and politely explain the regulatory and policy constraints to the client. The next step is to explore and offer alternative solutions that are compliant and address the client's needs as much as possible. Escalation to a supervisor or relevant department should be considered if a compliance solution cannot be readily identified. Question 16. The audit findings indicate that Bajaj Finance's current customer data utilization for targeted marketing campaigns may not fully comply with the consent requirements stipulated under the Information Technology Act, 2000. Specifically, the audit highlights concerns regarding the clarity and specificity of consent obtained from customers for the sharing of their personal information with third-party marketing partners. Which of the following approaches best addresses these audit findings while adhering to regulatory and ethical standards? Option A. Immediately cease all data sharing with third-party marketing partners until a comprehensive review and update of consent mechanisms are completed to ensure explicit, informed, and unambiguous consent for each specific use case. Option B. Update the privacy policy to broadly state that customer data may be shared with partners for marketing purposes and proceed with existing data sharing arrangements. Option C. Continue current data sharing practices, assuming that the general terms and conditions agreed upon by customers at the time of account opening implicitly grant consent for all subsequent data utilization. Option D. Implement a blanket opt-out mechanism for all customers, allowing them to withdraw consent for data sharing without proactively seeking renewed explicit consent for specific third-party sharing. The correct answer is A. Immediately cease all data sharing with third-party marketing partners until a comprehensive review and update of consent mechanisms are completed to ensure explicit, informed, and unambiguous consent for each specific use case. Explanation. This scenario presents a professional challenge for Bajaj Finance due to the potential conflict between business objectives and regulatory compliance, specifically concerning data privacy and customer consent. The audit findings highlight a critical need for adherence to the Information Technology (IT) Act 2000 and its associated rules, particularly regarding the collection, processing, and disclosure of personal information. The core of the challenge lies in balancing the company's need to leverage customer data for targeted marketing with the imperative to obtain explicit and informed consent. As mandated by law, a hasty or non-compliant approach could lead to severe penalties, reputational damage, and erosion of customer trust. The correct approach involves a thorough review and update of Bajaj Finance's data handling policies and consent mechanisms to ensure they align with the IT Act 2000 and relevant guidelines. This includes clearly defining what constitutes informed consent, ensuring that consent is freely given, specific, and unambiguous, and that customers are provided with clear information about how their data will be used, who it will be shared with, and their rights regarding data withdrawal. This approach is ethically sound and legally compliant, safeguarding customer privacy and upholding the principles of data protection enshrined in Indian law. It demonstrates a commitment to responsible data stewardship and builds long-term customer loyalty through transparency and trust. An incorrect approach that prioritizes immediate marketing gains over consent would involve continuing to use customer data without explicit, informed consent. This directly violates the provisions of the IT Act 2000, which mandates consent for processing personal data and outlines penalties for non-compliance. Another incorrect approach would be to obtain vague or bundled consent, where customers are not clearly informed about the specific uses of their data or have no genuine choice to opt out of certain data processing activities. This undermines the principle of informed consent and can be challenged under data protection regulations. Finally, an approach that involves sharing customer data with third parties without explicit consent for such sharing, even if the initial collection was consented to for internal purposes, is a clear breach of data privacy laws and ethical obligations. Professionals at Bajaj Finance should adopt a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves 1. Understanding the specific requirements of the IT Act 2000 and related rules concerning data privacy and consent. 2. Conducting a comprehensive risk assessment of current data handling practices against these requirements. 3. Developing and implementing robust data governance policies and procedures that embed consent management and data protection principles. 4. Regularly training staff on data privacy obligations and ethical data handling. 5. Establishing clear channels for customer inquiries and complaints regarding data privacy. This proactive and compliance-driven approach ensures that business objectives are pursued within legal and ethical boundaries. Question 17. Benchmark analysis indicates that Bajaj Finance employees are increasingly encountering customer complaints related to potential data privacy concerns. In such a scenario, what is the most appropriate initial course of action for a customer-facing employee when a customer reports a suspected unauthorized access to their personal financial information? Option A. Acknowledge the customer's concern, assure them that the matter will be investigated, and promptly escalate the complaint to the designated internal data privacy and grievance redressal team. Option B. Advise the customer to change their online banking passwords and inform them that Bajaj Finance is not responsible for any third-party breaches. Option C. Inform the customer that such issues are rare and ask them to wait for a few days to see if the problem resolves itself. Option D. Immediately assure the customer that their data is secure and attempt to resolve the issue by asking for more personal details to verify their identity. The correct answer is D. Immediately assure the customer that their data is secure and attempt to resolve the issue by asking for more personal details to verify their identity. Explanation. Scenario analysis. This scenario presents a professional challenge for Bajaj Finance employees regarding the ethical and regulatory handling of customer complaints, particularly those involving potential data privacy breaches. The challenge lies in balancing the need for prompt resolution with the imperative to comply with data protection laws and maintain customer trust. Employees must exercise sound judgment to identify the severity of the complaint and escalate it appropriately, ensuring that sensitive customer information is protected throughout the process. Correct approach analysis. The correct approach involves acknowledging the customer's concern, assuring them that their issue will be investigated, and immediately escalating the matter to the designated internal team responsible for data privacy and grievance redressal. This is the best professional practice because it demonstrates empathy and commitment to resolving the customer's issue while adhering to regulatory requirements. Specifically, under Indian data protection laws and the Reserve Bank of India (RBI) guidelines for non-banking financial companies (NBFC), like Bajaj Finance, there is a strong emphasis on data confidentiality and robust grievance redressal mechanisms. Prompt escalation ensures that the complaint is handled by personnel trained in data privacy protocols and regulatory compliance, minimizing the risk of further data compromise and ensuring a timely and compliant resolution. Incorrect approach is analysis. One incorrect approach is to dismiss the complaint as a minor issue and attempt to resolve it without proper investigation or escalation. This fails to acknowledge the potential severity of a data breach, which can have significant legal and reputational consequences for Bajaj Finance. It also violates the spirit and letter of data protection regulations that mandate secure handling of customer data and proper complaint resolution procedures. Another incorrect approach is to promise a resolution without understanding the full scope of the issue or consulting relevant internal departments. This can lead to miscommunication, unmet expectations, and potentially further breaches if the resolution involves unauthorized access or disclosure of information. It bypasses established internal controls and regulatory mandates for handling sensitive customer data and complaints. A third incorrect approach is to ignore the complaint altogether, hoping it will go away. This is a severe ethical and regulatory failure. It demonstrates a lack of customer care and a blatant disregard for compliance obligations. Such an action can lead to significant penalties, legal action, and irreparable damage to Bajaj Finance's reputation. Professional reasoning. Professionals at Bajaj Finance should adopt a framework that prioritizes customer trust and regulatory compliance. This involves 1. Active listening and empathy. Fully understand the customer's concern. 2. Risk assessment. Quickly evaluate the potential severity of the issue, especially concerning data privacy. 3. Adherence to policy. Follow established internal procedures for complaint handling and data breach protocols. 4. Timely escalation. Immediately involve the appropriate internal teams, e.g., compliance, data privacy, grievance redressal, when a potential regulatory or data privacy issue is identified. 5. Transparent communication. Keep the customer informed about the process and expected timelines, without disclosing sensitive internal investigation details. This structured approach ensures that all complaints are handled professionally, ethically, and in full compliance with applicable Indian laws and RBI directives. Question 18. Research into customer interactions at Bajaj Finance reveals a scenario where a potential borrower inquires about a personal loan and expresses concern about upfront charges. The loan officer, aiming to expedite the application process and secure the business, considers downplaying the existence of a processing fee. What is the most professionally responsible approach for the Bajaj Finance loan officer in this situation? Option A. Omit any mention of the processing fee during the initial discussion to avoid deterring the applicant. Option B. State that the processing fee is a standard charge, but imply it is negotiable without confirming with management. Option C. Assure the customer that the processing fee is usually waived for good customers and can likely be negotiated later. Option D. Clearly explain the processing fee and its purpose, referring the customer to the official loan agreement for full details. The correct answer is D. Clearly explain the processing fee and its purpose, referring the customer to the official loan agreement for full details. Explanation. This scenario presents a professional challenge for a Bajaj Finance employee because it requires balancing customer service with adherence to regulatory guidelines concerning data privacy and fair lending practices. The employee must exercise careful judgment to avoid misrepresenting product features or making promises that cannot be fulfilled, which could lead to customer dissatisfaction, regulatory scrutiny, and reputational damage for Bajaj Finance. The correct approach involves clearly and accurately communicating the terms and conditions of the loan product, including any associated fees or charges, and ensuring the customer fully understands these details before proceeding. This aligns with the principles of transparency and fair dealing mandated by Indian financial regulations, which emphasize informed consent and consumer protection. Bajaj Finance, as a non-banking financial company, NBFC, is subject to guidelines from the Reserve Bank of India, RBI, that require clear disclosure of all charges and terms. Providing accurate information prevents mis-selling and upholds ethical standards. An incorrect approach would be to downplay or omit mention of the processing fee to secure the loan application. This failure constitutes a breach of regulatory requirements for full disclosure. It misleads the customer about the total cost of the loan, potentially violating fair lending practices and consumer protection laws. Such an action could lead to complaints to regulatory bodies, penalties for Bajaj Finance, and a loss of customer trust. Another incorrect approach would be to assure the customer that the processing fee is negotiable or can be waived without proper authorization or understanding of company policy. This creates a false expectation and can lead to disputes if the fee cannot be waived as promised. It demonstrates a lack of adherence to internal procedures and potentially misrepresents the company's standard operating practices, which are often designed to ensure consistency and fairness across all customer interactions. A professional decision-making process in such situations should involve a thorough understanding of Bajaj Finance's product offerings, their associated fees, and the relevant regulatory framework. When faced with a customer query about fees, the professional should first refer to the official product documentation and company policies. If clarification is needed, they should consult with their supervisor or the relevant department rather than making assumptions or promises. The ultimate goal is to provide accurate, transparent information that empowers the customer to make an informed decision, while simultaneously ensuring compliance with all applicable laws and regulations. Question 19. The audit findings indicate that Bajaj Finance's customer data analytics team is frequently accessing raw customer data, including sensitive personal information, for routine reporting and trend analysis, with limited oversight on data retention and sharing practices. Which of the following approaches best addresses these findings while adhering to regulatory requirements for data protection and privacy? Option A. Conduct a one-time training session for the analytics team on data privacy best practices and instruct them to exercise discretion when handling sensitive customer information. Option B. Enhance existing data access controls by requiring explicit approval for each instance of raw data access and implementing stricter data retention policies for raw data. Option C. Implement a comprehensive data anonymization process for all customer data used in analytics and reporting, ensuring that no individual can be identified from the anonymized dataset. Option D. Rely on contractual agreements with third-party analytics providers to ensure they adhere to data privacy standards, while continuing current internal data access practices? The correct answer is C. Implement a comprehensive data anonymization process for all customer data used in analytics and reporting, ensuring that no individual can be identified from the anonymized dataset. Explanation: this scenario is professionally challenging because it requires Bajaj Finance to balance the need for efficient data management with stringent data privacy regulations. The audit findings highlight a potential gap in how customer data is handled, which could lead to regulatory penalties and reputational damage. Careful judgment is required to ensure compliance without hindering business operations. The correct approach involves implementing robust data anonymization techniques before data is used for analytics or shared with third parties. This aligns with the principles of data minimization and purpose limitation, which are fundamental to data protection laws. By anonymizing data, Bajaj Finance reduces the risk of identifying individuals, thereby safeguarding their privacy while still enabling valuable insights from the aggregated data. This proactive measure demonstrates a commitment to regulatory compliance and ethical data handling. An incorrect approach of simply redacting names and addresses without further anonymization is insufficient. While it appears to remove direct identifiers, it may not prevent re-identification through other data points, violating the spirit and letter of data protection regulations. Another incorrect approach of relying solely on contractual agreements with third parties to ensure data privacy overlooks the primary responsibility of Bajaj Finance to protect customer data at its source. Contractual clauses are secondary safeguards and do not absolve the company of its direct compliance obligations. Finally, an approach of ignoring the audit findings due to perceived operational burdens would be a severe ethical and regulatory failure, exposing Bajaj Finance to significant risks and demonstrating a disregard for customer trust and legal requirements. Professionals should adopt a risk-based approach, prioritizing compliance with data protection laws. This involves understanding the specific regulatory requirements applicable to Bajaj Finance, conducting thorough data impact assessments, and implementing appropriate technical and organizational measures to protect personal data. When faced with audit findings, a prompt and thorough investigation, followed by the implementation of corrective actions, is crucial. This demonstrates accountability and a commitment to continuous improvement in data governance. Question 20. Comparative studies suggest that employees in financial services often face situations where personal relationships might influence professional conduct. A Bajaj Finance employee, while processing loan applications, inadvertently gains access to a comprehensive list of potential high-net-worth clients who have recently inquired about premium financial products. An acquaintance, who is starting a new venture in wealth management, learns about this list and requests the employee to share it, believing it would significantly boost their business prospects. What is the most ethically sound and regulatorily compliant course of action for the Bajaj Finance employee in this scenario? Option A. Share an anonymized subset of the list with the acquaintance, believing it would be a minor compromise and help a friend's business. Option B. Politely decline the acquaintance's request, explaining that sharing customer information is strictly prohibited by Bajaj Finance's internal policies and Indian financial regulations, and that such an action could have serious consequences for both the employee and the company. Option C. Inform the acquaintance that while direct sharing is not possible, they could indirectly benefit by observing the types of inquiries Bajaj Finance receives and then targeting similar demographics. Option D. Share the entire customer list with the acquaintance, with the understanding that the acquaintance will not reveal the source of the information. The correct answer is B. Politely decline the acquaintance's request, explaining that sharing customer information is strictly prohibited by Bajaj Finance's internal policies and Indian financial regulations, and that such an action could have serious consequences for both the employee and the company. Explanation: this scenario presents a professional challenge for a Bajaj Finance employee regarding the ethical handling of customer information and potential conflicts of interest. The core difficulty lies in balancing the company's need for business development with the imperative to protect customer privacy and avoid unfair advantages. A Bajaj Finance employee must exercise sound judgment to uphold regulatory compliance and ethical standards. The correct approach involves strictly adhering to Bajaj Finance's internal policies and relevant Indian financial regulations concerning data privacy and conflict of interest. This means refraining from using confidential customer information obtained during the course of employment for personal gain or to benefit an external entity, even if that entity is a close acquaintance. The justification for this approach is rooted in the principles of data protection mandated by Indian law, such as the Digital Personal Data Protection Act, 2023, if applicable and enforced for the context of the exam, and the broader ethical obligations of financial institutions to maintain customer trust and confidentiality. Bajaj Finance, as a non-banking financial company, NBFC, is subject to regulations by the Reserve Bank of India, RBI, which emphasize customer protection and fair business practices. Using proprietary customer data for personal benefit would violate these principles and potentially lead to severe regulatory penalties and reputational damage. An incorrect approach would be to share the customer list with the acquaintance, even with the intention of helping them build their business. This action constitutes a breach of confidentiality and a violation of data privacy norms. It also creates a clear conflict of interest, as the employee is leveraging their position at Bajaj Finance for the benefit of a third party, potentially at the expense of Bajaj Finance's competitive interests and customer trust. Such a breach could lead to disciplinary action from Bajaj Finance and regulatory scrutiny from the RBI, impacting the company's license and operations. Another incorrect approach would be to dismiss the acquaintance's request outright without considering the underlying ethical implications or internal policies. While not as severe as sharing data, a complete lack of engagement or guidance on ethical conduct might miss an opportunity to reinforce company values and regulatory expectations. However, the primary ethical failure lies in any action that compromises customer data or creates a conflict of interest. The professional decision-making process for similar situations should involve a clear understanding of Bajaj Finance's code of conduct, data privacy policies, and relevant RBI guidelines. When faced with such a request, an employee should 1. Recognize the potential conflict of interest and data privacy implications. 2. Consult internal policies and seek guidance from their supervisor or the compliance department if unsure. 3. Prioritize the protection of customer data and the company's reputation above personal relationships or perceived favors. 4. Communicate clearly and professionally, explaining the limitations imposed by regulatory and ethical obligations without being dismissive.